let's dive on in. I'm going to cover all of the levels, the stuff that we're seeing, some of the headlines from over the weekend, the upcoming economics, earnings, the usual, the whole shebang. I'll briefly outline just a couple examples of some of the stocks and sectors that I'm looking at, but it's so fluid day to day what we're looking at because of just it's such a headline driven market. So we got to be very flexible and you got to be on your toes in this market, that's for sure. But let's take a look at the SPY first. So no real surprise to anyone who's even remotely looked at not even the market, but just the news that we are, still in kind of this downtrend, very choppy and whippy. Last week we really just kind of spent almost the entire week within Monday's range. Tuesday had that little flash lower, but it wasn't anything too crazy. So we really spent almost the entire week in an inside week in Monday's range. So that just tells you that despite all of these headlines, despite everything that was going on, all of the trading, all of the Russia stuff, all of the Fed talk, and anything, we really didn't end up going anywhere. Couldn't hold above this kind of important range here in the SPY. We couldn't get above kind of the January buy, the buy from back in October when we dipped below the 50-day. So this is kind of our important level that I would like to at least see. If you want the market to go up, this is definitely your first spot here that we need to be able to tackle because we could not hold above that. Obviously, we finished Friday on a very weak note, very soft note. No real surprise. I guess no one really wanted to be buying into the weekend where there's potential for who knows what to escalate and happen. So that's what we saw. On Friday's action, just nonstop selling. The headlines were pretty much the same. Same old, continued, escalation and rhetoric. No real new actual action from what I saw that was notable in terms of, a capturing of cities or shelling or anything like that. It was more just from the rhetoric side of things. So Putin out there saying that NATO shipments of weapons to Ukraine are now viable targets. So that's going to be a headline that we obviously need to listen for because that's the potential for escalation with NATO. That's going to be something that could definitely, move the markets a little lower if they do start targeting NATO shipments, NATO items, NATO convoys, whatever. So definitely need to watch for that. We had last week, this little optimism on Friday that Putin said, oh, there's certain positive developments in negotiations, and I think to no one's surprise, it didn't go anywhere yet. We haven't heard anything to the affirmative on any of that. So, for example, they've had 3-4 rounds of talks now, and they get little tiny things here on like humanitarian corridors or anything, but no one is giving an inch there. So they're those kind of talks. The more that we hear that kind of stuff, the less the market's going to move, and that's why we immediately faded that anyway, even before the open, frankly. So until anything changes there, narrative is still to the downside. So we've also more or less priced in a lot of the expectations here. Unless you get some kind of unexpected escalation, the market kind of has priced what's going on in. That's why we're not lower at the moment. Now, what we haven't priced in, like Mike has said during our midday show, and we've talked about, is recession. We don't know exactly how quickly this is going to come, how swiftly and how aggressive it's going to be. But with what we're seeing as a result of this, and as a result of things that were already building prior to this conflict, we're at this point we're slated to push into a recession this year. Goldman obviously last week gave it a 35% chance odds of recession this year. The longer that this goes on, the higher those percentages are going to go because we're continuing to strain things. Oil and gas prices will continue to climb. You'll see other commodities climb. I think it was the UN that warned that this crisis could cause like a 25% rise in global food prices. Things like wheat, which usually export from Ukraine, Russia, especially to more impoverished countries. They get a lot of their wheat from this region. So there could be humanitarian crises this summer as well, depending on how long this goes on. And then you also have things like the Russian export ban. If that could continue to escalate. It seems like it's relatively light at the moment. I think lumber was maybe the biggest actual hard commodity that they said that they're banning, but Russia is going to start banning exports. We've already started banning imports from that country and that region. We've had some pretty smart people in our chat talk about things like neon gas. That's not going to be coming. Ukraine, I think, one of our viewers said, had like 50% exports of neon gas, and that's used for chips and semiconductors. So you've seen wait times for semiconductors already start to go back up because we're expected to see more shortages of that again. So there's just going to be a lot. Long story short, this is just the wrong time for all of this to happen. Clearly, not that there's a right time, but it's just going to pile on top of the market was already pricing in Fed policy error even prior to all of this, when the Fed was tilting, uber hawkish, but was still buying things in the face of all this inflation. The market and the bond market was pricing in, error and issue. So now the Fed is going to be stuck with figuring out this week. We think we have a good idea of what the Fed's going to be doing, but you've got insanity in terms of inflation. You've got CPI, I think, which last time was like at the highest since like 1982 or maybe even the 70s. You've got PPI obviously flying out as well. So with all the inflation stuff, the Fed's going to need to try to tackle that by raising rates. But the issue is raising rates probably aren't even going to help at this point. It's at that point, maybe it would have helped months ago, maybe. But the issue is now, the Fed can't fix these supply chain issues. The Fed can't fix oil. It can't even touch oil. OPEC could probably hardly touch oil at this point. So there's just such voracious demand from governments right now to combat their reliance on Russian oil. So the Fed is really gonna, they're gonna do what they can, but let's be honest, what are they ultimately gonna do? They're usually behind the eight ball as it is anyway. So that's what we're gonna be definitely focusing on this week. Wednesday is gonna be that Fed meeting. They also do have the press conference at 30 minutes after, so Wednesday at 2 p.m. Eastern, and then 2:30 is the press conference. We'll certainly be watching it with all you, but it's gonna be interesting. So market largely expects that 25 basis point hike, probably nothing else. Obviously there could be the chance that we get the balance sheet headline in there, that they start a runoff on that, but it's very unlikely. Powell's been pretty standard and pretty straightforward, saying they want to wait until rates have largely started rising before they start tackling the balance sheet. So we'll see what the hell happens there, but market's not going to like any of it, most likely. And the longer that this goes on, the more issues we're going to see. Goldman, along with talking about that odds of recession, cut the 2022 GDP to 1.75% for the whole year. That's already borderline. We're already borderline pushing into recession territory, because a recession is, I believe, 2 consecutive quarters of negative GDP. This quarter was very close. Next quarter is going to be even closer. So we're already kind of on that path. Goldman also cut their S&P target. Yeah, it's kind of funny. Their full year S&P target still 4,700. So they still think that the SPY can close up here near the highs. Bless their hearts. I don't know what they're expecting to happen to really turn this market back around like that. But to put things into perspective here, this market's had a hell of a run. This market from low to highs has run 120% plus. So to think that we're still going to hang out up there, it's possible. It's definitely possible. We thought we were going to have a choppy market prior to all of this happening, but they did say that their recession downside. So if we do tumble into recession this year, and so it's kind of, I suppose, their bear target, it's about 3,600. So this 360. So they just think that at worst we retrace the full year's move. Again, no one knows where the market's actually going to go, so you got to take. No one knows where the market's going to go, so you have to take the analyst's word with a grain of salt. But that's their target here, is going to be about this 360. It's pretty much retracing back to the weekly 200, which maybe isn't the worst kind of target to have. If you zoom out, the weekly 200 is kind of a good level to have. The only time we really went below it was during the 2008-2009 financial crisis, is when we finally dipped below that. So that's probably not the worst target to have us retrace back to that. So it's an interesting level to look at. So that's what you get, but that's only 60 points lower in the SPY. That's on our range here. So if that's going to be the year-end target, the fact that this is our whole year's target, that should tell you just how choppy this year is probably going to be and how crazy it is, and that should set the expectation. But not to look any much further than that, let's go back into looking at this week. because I think that sets the stage enough. Obviously, your low end that we'll be looking at is going to be kind of the dip here, this low from when we had that massive gap down and dip buy. It's also kind of a little bit of support from earlier last year. It's really going to be some of the levels we're looking at. I don't know if we'll get to either of these extremes. What we're going to have to look forward to this week is going to be two major events. Obviously, like I said, the Fed on Wednesday, we kind of already know what we expect from the Fed. So if we just come out with the 25 basis point hike and nothing else, market might be okay with that because it's like, oh, it's just it's a more dovish Fed than we were worried about initially. But they could come out with a nasty surprise. And then also Friday is going to be options expiration. Now, I don't have that gamma chart on me, but I showed that chart the one day where we are so humongously negative skewed on the Q's gamma to the downside. I mean, it is insanity the amount of negative gamma that's out there in the markets right now. I believe it's probably historically all time on the most bearish tint there. So just keep that in mind that there's a lot of options out there pinned in the markets, and it could cause us to, first of all, see some very volatile moves. But second of all, going into options expiration, it could cause us just to be pinned to these levels anyway. So there's a $3.8 billion in options gamma expiring pretty much at the level that we closed at. And then below that, you've got, or above that, you've got 3 billion, a little higher at like 430. So ultimately, I really could see us just staying in this 20-point range in the SPY all week, unless you get some kind of drastic headline to push us in any direction. I could see that. Now, if you do get a headline, this market is so negatively bearish and so heavy on the downside that you could see there is potential underlying in here. It may not happen, but we need to be wary of the mother of all squeezes that could absolutely blow people out. That does have potential. We've seen it in nickel, that's for sure. We saw it in a lot of the other commodities, that's for sure. It absolutely could happen to the market. So just keep that in mind. Even if it's a stupid headline, if the stampede starts, margin calls are going to be quick. This is a very margin-heavy market. So just keep that in mind as maybe defensive measures if you're if you're trying to hold things to the short side. It's just something to know, frankly. But anyway, that's kind of your range there. Qs obviously did kind of the same thing. They're a little weaker, a little closer to the downside here, but you still have kind of this support. We almost touched it twice pretty recently, and then you've got a little bit of a double bottom here. Back early last year as well. This would be my first target on the downside. On the upside, I mean, we just keep putting in these lower highs. So if we can breach a new high over last week's high, it would be a good thing on the positive, like on the short term. Wouldn't necessarily turn me bullish, but I could see us kind of hanging in here. IWM is definitely one that kind of really shows, I think, a clearer picture. While SPY and Qs, they look like they're in a downtrend, but they're not really going anywhere. IWM's just been a chop mess since the initial January drop. This has just been whippy, choppy action. So until IWM really starts reapproaching some of the lows here or some of the highs here, it's all just still chopped to me, and it's all still kind of a wash. Now, we did see some of the reopening plays actually had a good kind of close to the week. Expedia had a nice rebound. I think Mike said his Live Nation had a nice bounce off the 200-day. I think some of the hotels did okay. Yeah, so you had a nice bounce in a lot of reopening plays. They actually had a decent close to their week, but we'll have to see what this week looks like. Volatility was interesting. We talked about this yesterday. VIX was negative for most of the day, as was the market. So you had the entire market kind of dropping off, but meanwhile, volatility was dropping off. Kind of interesting to see that divergence. VIX has been steadily in an uptrend, and then towards the end of the week, we actually dropped off despite the market kind of making new lows there. So I think that's something that we definitely need to watch and monitor. I'll definitely watch, for what the next support level and inflection point in the VIX is. I think we'll continue to see volatility elevated, but VXN obviously held up a little better, hardly broke out of its uptrend. RVX as well. The VIX was what really was the weakest there. No real comments on why. I think we're just gonna have to wait and see and continue to monitor that. Rates were pretty strong last week. That was really it kind of started, but then was really accelerated when the ECB came out in a much more hawkish stance. So you've got a lot more hawkishness from Europe as well. They're trying to combat some serious inflation, and let's be honest, they're facing some even more serious inflation pressures because they're much more beholden to what's happening on their eastern front there with Ukraine, Russia. So you're going to get that hawkish tint from the ECB. We'll see if we get a similar hawkish tint from the Fed on Wednesday. I don't expect much out of rates prior to Wednesday. I don't know who would be initiating positions in front of that unless they thought that they had a serious handle on not only what the headline was going to be, but what the market was going to think of it. So we'll see. I'm sure Powell's Q&A is going to be just packed full of impact from Ukraine questions, and are you guys gonna go more dovish if this turns into a recession, and all sorts of stuff. So Powell will have a good opportunity to play the hawk or play the dovish good boy if he wants to on the press conference. It's going to be interesting. But that's really all of that. Just taking a brief little walk down commodity lane here. We all know what oil did, and it squeezed higher, had a nice little pullback. If I did a little fib retracement just from this most recent breakout, we almost did a pretty significant retracement there, about almost 78, almost hit the 78.6%. So I wouldn't be surprised if we just saw this start to move back up. Frankly, there are a lot of headlines that we need to keep an ear open for on oil. Potential for Iran to come back into the mix, Venezuela to potentially come in the mix, Canada's talked before. There's a lot of things that could come out. We had the fake headline of the UAE pressuring OPEC to increase production on Friday. That turned out to be a bullshit headline. But it's going to be just like the market's going to be even more beholden to headlines. So just be careful with oil. It's providing a lot of great short-term opportunity, for sure. Gold doing its thing, kind of looks exactly like oil. I think those commodities are largely going to kind of trade hand in hand at the moment. And dollar had a really nice strong end to the week. I think due to the market also being a little weaker, or had a but I just don't know. I don't have an edge right now on the dollar, frankly. I hardly watch it from a trader perspective as is. I just kind of watch it on the macro side. But before going into the Fed, it all depends on what the Fed ends up doing. So we may not see much out of the dollar prior to that, but we'll see. We'll see. But then what I do watch a little more heavily is Bitcoin and crypto, because it's been trading a little too much with the market. I hate it. So there really hasn't been any good trading in crypto for the last, probably 2-3 months, frankly. You have very brief moments, but it's so fleeting right now. But there was that headline that a lot of Russians might be wanting to liquidate crypto. I'm not, Russia's not really big on the crypto scene from what I've seen anyway. That's why when people were saying, oh, Russia's going to switch over to crypto, it's going to be great for crypto. To the scale that Russia would need to, I'm not buying it personally, but we'll see. Crypto's definitely not been the inflation hedge and the risk hedge that people, have the year prior were claiming it would be. So this just is more of a risk on indicator, and we're not seeing that happen right now. So that is that. Talking about just some of the other stuff we're going to see this week and some of the stocks, and then we can wrap this up. Some of the stuff to expect this week. Monday is going to be an absolute snooze fest. No earnings, no economics, no nothing to really write home about. Monday night, we do have some China red folder numbers, which could be interesting. They've been having to institute a little QE themselves because they're facing a little bit of economic pressure, and they're having another COVID wave, and they still have their zero COVID policy. So we're going to have to see how that goes. We haven't heard from Evergrande or any of that situation in a while. It's going to be very curious to see what happens in China over the next month or so as well. So Monday's going to be a snooze fest. Volume will probably be pretty light as a result because unless we get another headline prior to Monday's open, I don't expect much personally. Tuesday we'll have PPI, final demand. You have Empire State Manufacturing. You have Red Book store sales. So you do have some numbers going in. And then Wednesday's obviously going to be the bigger day. Retail sales. Retail sales have been pretty interesting the last couple months. Been very, very big miss, very decent beat. Import-export prices, business inventories, and then obviously the Fed. Thursday, industrial production, I guess, Philly Fed manufacturing. But then you just have like your jobless claims, and then Friday's just existing home sales. So Friday's likely going to be a snooze fest as well. So all the action likely confined to the kind of the middle of the week there. And then in terms of stocks that I'll personally be watching, I'll just kind of give a couple examples. Obviously, a lot of it is really risky right now. I don't want to hold something overnight with what the market's doing. There are a couple that interest me. Something like Walmart, that I think, they have zero stores in Russia, so they have no exposure, frankly, to Russia. I don't know about Ukraine actually. I did not look at that, but very low exposure to that. But with a high inflationary environment, I expect Walmart to do pretty well. And for the first time since we peaked out here, we finally made a new high. So I'm kind of interested in Walmart here. If I go to a weekly, you'll see that really just been kind of in this massive chop, testing the weekly 50 day. It's also been, like I said, chopping for that those many months, so expectations are low on that. Bob has been a great, fantastic, wonderful short. It's been great. I don't expect the China plays to turn around anytime soon. Maybe the Monday numbers could do that for them, but this is the Baba IPO from like a decade ago, so we're finally kind of crushing off through that. And the China companies that have been reporting earnings so far have not been good. JD was the one that really sent Baba sending lower. This week, I believe we do have a couple other Chinese companies. So Tuesday after the close is YY. That is a China company. Let's see. We have a couple others, but most of them are now penny stocks like IQ. This one was one. God, I remember we were trading this one up in the 30s, and now it's $2 a share. But there's going to be a couple China companies. Also, just keep your ears open if they do anything else domestically. The China indexes have been getting crushed lately, so that one's been pretty interesting to play. Uranium's been one that I've wanted to play. It's just been a little. I thought it would go a little faster, though. To be fair, I guess looking at this chart, you can't be that upset with it. With the alternative energy push that we're looking now for European countries to stop their Russian oil independence. Germany's been the primary focus. I'm still scratching my head as to why they're so reluctant to turn their damn reactors back on to help their country. But they're one of the countries that are most kind of finicky with this stuff. But uranium, especially since U.S. also just banned a big import from Russia on uranium. I don't see anything but upward pressure on uranium markets right now. So it's still something that's long-term bullish for me personally. Some of the other stuff, I mean, Berk's been doing really well. Obviously, Berkshire Hathaway is, kind of still making new highs in the market because they're in a lot of staple stocks. But what's interesting though is consumer staples lately have been getting clubbed, like absolute seals out there. I mean, look at Coke, Conagra getting absolutely obliterated. PepsiCo rolling off, Procter and Gamble. These were stocks that were holding up their value actually very well in the face of all this, and now I think we're starting to see the impact of some of these companies that actually have a decent amount of exposure and are going to face that pressure from this. So even the high dividend kind of quote unquote consumer staple plays are starting to feel that as well. We'll see if that progresses. Other than that, going into some more maybe short-term trading perspectives, obviously I'll continue to watch the Ukraine stocks, the ones that will fertilizer, Mosaic, aluminum, Alcoa. If that one wakes back up, maybe I'll trade wheat if that one wakes back up. We may get another move in like oil and gas plays. I don't know if like Indo is going to go again, but you could still trade like Oxy or CLF or any of the energy plays that you want to trade that are giving you a lot of opportunity. Those guys are still going to be in play, assuming we get more headlines there. You could play. I'll probably watch second day plays on some earnings plays. Rivian kind of just sitting around down here. DocuSign had its weekday. CrowdStrike. We've seen a lot of stocks kind of do nothing on their earnings day and then maybe take off the next day or maybe 2 days later when traders aren't looking and there's not as much chop and thickness to kind of cut through to move in either direction. So I might still keep an eye on some of these, maybe set some alerts, but we'll have to see. We're pretty much at the tail end of earnings season here. It's very, very light. Tuesday you'll have YY and Sentinel one, so a little cybersecurity in there. Wednesday you've got Rumble. I mean, you will also have like Lennar, Guess for a little more retail. William and Sonoma. Thursday you do have a solar company, Canadian Solar. So we have seen solar pick up. Dollar General, FedEx and GameStop. So there's some stuff in there, but it's gonna be a very like let's see what's moving for the day as we're going. Some of the other stuff, I mean, maybe Lockheed Martin, but that one's already frankly starting to drop back off. It feels like it's setting up a short for us, unless we get more involved, but that remains to be seen. I'm not going to hold these guys overnight, that's for sure. Maybe I'll trade stuff like if Kroger wakes back up. Unlikely. Amazon's obviously doing their split, but I don't think we're going to get any action in this until that actually happens. I'll watch Twitter and Facebook and Meta feel like they're still going to continue their crash into hell, and I get nothing but bad headlines on these guys. So I see no reason to try to buy something that looks like this. That's likely going to continue to drop. Same thing with Twitter. It's pretty much on its way back down to COVID lows. So these guys definitely not doing well at the moment. So there's opportunity out there. There's going to be plays, but it's going to be short term in nature for me personally. But I think that really sums it up for the week. So it's going to be interesting. It's going to be headline driven. I'm going to be probably lighter volume Monday and Friday, and maybe even Tuesday. I'm expecting, unless we get a headline or unless there's some low float company running or something breaking out that I didn't see or something like that. But it's just going to be a very scanner heavy week for me because other than that, it's just the same old shit that I'll be looking at, and that stuff is probably going to be a snooze fest. So we will see.